Welcome back to Yahoo Finance Live. It does seem like we could potentially be getting close to the opening trade for DoorDash right now. The indication 185 to 188 a share. The shares were priced at $102, so we're still seeing significant upside here. But the narrowing of that range seems to indicate that we could be getting closer to those shares beginning the trade. Zach, I feel like we're sort of running out of words to describe just the huge bullishness that we have seen in this space. At least what the action that we've seen so far as we continue to see the price range push even higher. That was interesting earlier when we were speaking to David Traynor, the CEO of New Constructs, who's been quite critical of DoorDash and their listing here, where he talked about there's no real moat here for these food delivery service companies. And the expectation here is there's going to be a lot of consolidation. And yet you look at where things are right now, it feels like that narrative of this huge momentum DoorDash has seen during the pandemic is really what's taking hold in the market. And investors are betting on the fact that that's going to be a sustainable growth.
Yeah, and I mean, I think it's important to remember if you're talking about the $102 price that they had in the IPO, that's where shares were priced in the IPO. It's very different now when we're talking about $185 a share potentially, and we'll see where it opens for trading here. But I mean, that is key as an investor, as we discuss, whether or not you should jump into a company like this. And obviously, it's not necessarily our place to say, but it is important to kind of realize the excitement that kind of sends these shares higher. We saw that with Lyft. It hasn't regained where shares came out in that IPO when they were at $72. They popped on their day one of trading up to $87 a share. We're expected to see quite the pop here for DoorDash as well. But you're right. I mean, there may have been a case to be made that, SoftBank has thrown so much money into DoorDash that they could push out. They already stole share from Grubhub. They could push out their other competitors, completely control the market, and finally see some of those pricing pressures abate. But when we're talking about price levels like this, I think it's very important to remind our viewers that there are always opportunities outside of day one to get into these companies. And very often when we talk about Facebook or Lyft or a lot of the companies we chat about here on day one, there's always, almost always, not necessarily always, but most of the time, a better opportunity to come into some of these names 3 months down the line once some of that excitement kind of sheds and you can start to look at the numbers, the underlying numbers, and try and get a better valuation on some of these names.
Yeah, I mean, that seemed to be the argument that David Traynor was making initially, that look, why get in on the stock on the first day here? Wait for a bit of a shakedown, a bit of the euphoria to sort of go away and really look at where things stand as it relates to this company. We should note, you pointed to SoftBank here, roughly 25% stake in the company. So certainly they are liking what they see right now, a big payday for them on this IPO of DoorDash. This is one of those companies that did see a quarter of profit here. So in the second quarter, they were in fact profitable, but they did post losses in the third quarter here. They have yet to post an annual profit, although, I say this knowing that that hasn't really seemed to stop investors from getting in on a lot of these tech IPOs, and it's sort of the same narrative that we talk about.